Hello, everyone. Hi, and welcome to the panel discussion, Current Perspectives on the Tokenized Carbon Credits Market. This panel is hosted by the European Carbon Offset Tokenization Association. In short, we are ECOTA. We are a think tank connecting bright minds like Nick, like Mikkel, like Nura on topics in and around regenerative finance. And we have a special focus on tokenized carbon credits. We want to provide you in the audience with the best possible education about this young, very fastly growing and very vibrant industry. And at ECOTA, we're passionate about the intersection of sustainability and blockchain technology, and we want to use this combination to achieve a net zero future for our planet. Panels like these, panels like you're just watching, are made possible by our trusted institutional members. So thank you very much for everyone who contributes and joins us as an institutional member. I'm Max, I'm an executive director of ECOTA, and I'm your moderator for the event. Before we start into the actual panel, I want to encourage you in the audience to use our chat. The chat is open without a restriction, so we prepared an agenda for you and for this discussion, but we're all happy to take your questions. Just post them in the chat and I will raise them to our panelists. Happy to have any questions on any topics here, just use the chat. So Nick, Mikkel, Nura, thank you very much for joining. Let's do a quick introduction round here. Let's start with you, Nick. What are you working on and why are you passionate about refi?
Sure, yeah. Hi, everyone. I'm Nick, CEO and co-founder of Arbon, and we're working on various solutions to use blockchains to make the voluntary carbon market more transparent, more trustworthy, and more accessible to companies and individuals who may not want to use blockchains directly themselves. So really trying to bring the benefits of Web3 tokenized carbon to a broader audience who haven't thus far interacted with blockchains. So yeah, and I'm personally very passionate about the possibility of decentralized ledger technology to really just enhance the full transparency over every step in the chain of carbon credits, and that I think will allow more eyes on the problem and to us to overcome some of the trust issues that I'm sure we'll be talking about in a few minutes.
Panel on tokenized carbon credits. Trust will be on our agenda today. Don't worry about it. Nick, thank you very much for joining. Nura, let's go with you next.
Sure, yeah. Hi, everyone. So my name is Nura. A bit of background, originally from Indonesia, but now I'm based in Germany. I'm the co-founder of Pleno. So at Pleno, we are developing a platform that streamlines the end-to-end carbon credit creation process. So to make an automations on data collections and also carbon forecasting using machine learning, and also store data transparently on the blockchain. And yeah, just adding to Nick as well, I'm kind of working on the refi space since last year, started by joining community like this, started writing on articles and blogs, and in the end, really inspired by many projects. So that is why I decided to start Pleno just very, very recently. So yeah, looking forward to the discussion.
Noah, thank you very much. We also featured you with one of your articles on the ECOTA site, so happy to have you as a contributor. Thank you. Mikkel.
Hello. Hi, everybody. I'm Michele, Chief Sustainability Officer at Impascope, where we leverage Web3 to create sustainable impact and tools for monitoring, reporting, and verification function. And yeah, personally, well, I live in the mountains. I love glaciers and forests, and I love exploring how technologies, can help support the maintenance of such assets. So yeah, I'm putting together my nature interest and technology one to create a better future, hopefully.
Thank you for joining, Mikkel. Obviously not a German mountain, otherwise you wouldn't have been able to join us today with your internet connection. Nick, I wanted to start with you first. I wanted to have this panel sort of like a basic panel. We had this discussion, and Michele was on it too, like a year ago, and we talked about, hey, there are some trust issues in the regular voluntary carbon market, in the VCM. We have this new technology here. It's called blockchain, and it's so good in making things more transparent and cutting out the intermediaries into bringing trust into transactions. Now we are a year later, and I wanted to have your perspective on, are we any further in the voluntary carbon market in and of itself? Can we with tokenization? Can we without tokenization? What would you say is the trust in the market right now? What is the state of the market, the integrity? Did we get better?
I would say that we are not further along in the voluntary carbon market. I think it's fair to say. I think there have been a number of issues that have arisen in the voluntary carbon market over the last year, definitely impacting the trust that people have in carbon credits. And that's seen a bunch of companies firstly be sued for having bought carbon credits that were later shown to be worthless, or not worthless, but of questionable quality. And I think the problems that tokenization is supposed to solve, which namely transparency over the provenance of credits, the prices that middlemen pay for credits and profits they manage to extract. Those problems were perhaps the ones that you and Michele were talking about a year ago. I'm not sure. They are not the problems that have been shown to be most critical and urgent and at the forefront of people's minds in the last sort of 9 months. And I think blockchain has something to say about those new problems as well. But it's definitely been a sort of, I would say, a year of little progress, personally, but keen to hear other people's opinions.
Yeah, that's exactly the bridge that I wanted to build too. Nick, you are Nora, you are building a company in this new market 1 year without any small footsteps into the right direction, as Nick said. Is that the perspective that you share?
Yeah, I can only amplify that, like, as we see, especially this year, right, with several articles coming up. And this is just the top of the iceberg. And we see more and more people are questioning as well. But that is also why that, people like us, but also many others as well, that would like to help and contribute, to solve the problems, right? And as what Nick mentioned as well, what we see right now is something that is a project already been set up or happening 10, 15 years, 20 years ago, right? So there are more projects coming up that now this is the time actually for us to introduce new technologies. Blockchain is, of course, a part of it, that we can actually create, let's say, new generations of credit with more credibilities, with more access to the market. But I think for me personally as well, the most important thing is also how can we allocate the fund in the right place, supporting the projects, local communities to the place where it belongs, let's say. So there's a lot of things to do, but yeah, I'm very, very optimistic.
So, Michele, I started this topic out with, we talked 1 year ago. Now, Nick said some things, and he said, I don't know whether you talked about this, and it were the exact things that we were talking about 1 year ago, right? So transparency, price discovery, for example. So haven't we done, I mean, we talked about this openly a year ago. Are there any progress, or do you see any progress being done in this last year?
I think so. I would say the main driver which is coming right now concern regulation, because like starting from now, big companies, basically there are 50,000 companies in the European Union that have to complain to prepare sustainability reporting. And, on the other hand, there are some greenwashing regulations which are coming up, which are defining some criteria, to define what greenwashing is. And I believe that from that perspective, again, that there has been a drive to be able to trace such tools, such sustainability efforts, because particularly when it comes to the reporting function, there is the need for this reporting frequently, to be confirmed by the auditors. And when it comes to auditing, there must be some procedure that must be followed, And again, transparency is required there, not being able to tamper the information. And I think from that perspective, maybe it hasn't started yet, but there will be a significant demand for tokenization, or at least creation of digital twins for assets that are concerning to sustainability reporting. Mm-hmm. On the other hand, as you were mentioning, the discussion we had at the beginning of the year, I believe that there is a increased demand, not only from the carbon offset perspective, but more generally to, for example, biodiversity credits. I recall I was mentioning the problem of carbon tunnel vision, in the sense that we are mostly focusing on carbon now, but we should open up, our perspective. I don't know whether you are aware of the donut economy framework, the boundaries of the planet. So we should be able to account for more elements other than just CO2 emissions, basically, or offsetting. So yeah, I think those may be drivers which have been pushing demand, and on the other hand, somehow developing the underlying technology.
I want to circle this back to you, Nick. We just heard Michele talking about, hey, maybe this market has to be more encompassing. And there are some drivers that drive demand like beyond carbon. So this is the one factor. And the other one, my LinkedIn obviously is biased, but if I open up my LinkedIn this week, probably like 90% are posting about NYC Climate Week. And I see so many people there, important people making decisions. So at least from my perspective, the demand shouldn't be a problem, right? So maybe you can give me your perspective on this. Why are we lagging in the market, obviously in the supply of it?
I think there's a bunch of really good work going on in terms of helping to address the issues that I think have been raised by various of the articles that have been published over the last year. So, at last we have like the ICVCM's carbon claims code that will give people a kind of standard assessment of whether a credit meets a certain minimum bar. There's progress from, Gold Standard on like their tokenization framework and their guidelines. And Michele already mentioned sort of some of the regulation that's coming out on greenwashing that, really makes it more difficult for companies to make, excessively easy claims based on this stuff. So yeah, there's definitely progress being made, but I think the supply, Nora hinted at this, right? A lot of the supply that's in the market is stuff that has been in development for several years, according to standards that have very suddenly or very quickly been shown to have been lacking. And a lot of the newer supply is not yet there. It is growing, maybe not fast enough. So I think like there's a lot of good work, as I say, going into addressing these issues. And clearly companies who are still the main buyers in this market do want to be doing more, to be funding more, but there is still a huge reluctance to pile into a lot of the supply that's already there. And I think that is just going to take a bit of time while people figure out what constitutes a good credit, because the answer to that is very different from what it would have been a year ago.
And I want to bring this directly to Nora, because in your first point, you said, hey, we have to allocate the funds, for example, to the projects directly at the start of the chain. Now, Nick just mentioned some of the standards, for example, Vera, Gold Standard. There are, at least from my perspective, there are two views on that. Hey, we need the standards to come up with an integral standard that we can all follow, that is understandable and that is robust. And then there are some people that say, hey, we don't need these standards. If we have DMRV, for example, so measurement, reporting, and verification, validation, on-chain, for example, on a tokenized carbon credit, then we don't need any standards, because I can look directly into the token, for example, and see whether this is a token that is valid or not. Now, you are founding a company that is directly working in this. So would you say to Nick, for example, hey, standards are all right, they're developing some things, but the real answer to probably the challenge of integrity lies in DMRV?
Yeah, maybe I'll maybe share a bit of personal story, right? When I kind of come into the space, starting with like the blockchain, cryptos, also like, we can be free from any standard institutions from like, bank and financial industries. And that's also the mindset that I have coming into the carbon market, right? We don't even probably need the standards, but it's like a learning curve, right? You thought it's like the problem is here, but the more I went deeper into it, talking to more people, then the more complex I understand, right? Why we actually might still need a standard, right? It's not about like abolishing standards. Of course, there are people who are working on that. I think the most important thing is that how do we work with the existing system, either improving them or also building something on the side as well together, right? Because why we all know here, you know, in the blockchain panel, it's all verify, don't trust. But right now, if we talk to the buyers, they still need a trusting point, at least the most that I've been talking to as well. So I think that is why that we need to improve the system, but also educating people, right? Why transparency is important, what does it mean, what we can verify, you know, what are the assumptions and so on and so forth. We can go very technical on that, but on a high level, it's like any standards or any stamp. You buy a food, you need an organic standard, then you believe on it. This is also the mindset that I understand also in the carbon market.
Very interesting. Nick, go ahead.
Yeah, I think I fully agree with that. And there is a difference between making raw data available, right, which is kind of what the promise of DMRV is, and you know we can make it possible for anyone anywhere to look at the underlying verification data and analyze it. And then there's like, well, does it meet a certain standard? And you can have multiple standards. You can analyze the same data to check whether it meets those multiple standards. And I think it's too much to expect the ordinary buyer of a carbon credit to do their own analysis on every single bit of raw data in every single token. I think you need those standards so that raw data can be aggregated into a check mark that says it meets this standard. But if that standard is later found to be wanting, the fact that the raw data is available and you can aggregate it up to a better, improved standard is really important. So I don't think the goal should be to get rid of standards. It should be to sort of open up the evaluation of credits to multiple standards to be easier. If that makes sense.
And I want to, so Michael, you talked about encompassing more than carbon. Now we have this standard challenge already in the carbon market, which from my perspective is one of the most developed markets in the refi industry out there. Now you talked about, for example, biodiversity and other use cases. Now if it comes to integrity, accounting for these, wouldn't that also be a challenge in these markets, or do you have a different perspective on this?
I totally agree. It's a challenge. But on the other hand, it's part of the game. We have to act fast. You know, when it comes to climate change questions, we have to act fast. But personally, I believe, you know, without standards, it's pretty much impossible to make sure that what we are doing is not considered, you know, or of low quality or reputable ones. Therefore, yeah, really, there is a need to come up with something. But yeah, unluckily, it takes time. Personally, I come, you know, from the audit background, financial audit background, and, you know, accounting standards, they've been around for decades, if not centuries almost. And still it's a work in progress in the sense that sometimes there are some subjective elements, even when it comes to accounting standards for, you know, financial reporting. And I guess it's somehow, yeah, normal, luckily, but without standards, really, there's no comparison. You know, you cannot really talk about audit without standards. So, yeah, the challenge is to be as fast as possible, but still it's complicated. It requires stakeholder engagement. Otherwise, the question is that everyone will come up with a standard that is more convenient for them and for their industry. But it's like blockchain interoperability. You know, we talk a lot about blockchain, but if all of us are building individually our own blockchain, and such blockchains are not communicating among others because there's no common standards, then, you know, yeah, we're totally missing the point of what you're doing.
Yeah. And I want to circle this back to Noura afterwards, but we have some questions from the audience already coming in. Keep them coming. I will note them down and we will get to it later on. But Noura, I wanted to ask you, now Mikhail raised the possible issue that we don't have these standards in the regular market. Now we are adding blockchain on top of this, and he talked about the interoperability of blockchains. Now, if we don't have a clear standard, and now we emit, I don't know, tokenized carbon credits on 5 different layers or chains, and they don't speak to each other, doesn't this add any or more complexity to the entire topic? So what are your conversations with your customers look like? Do you even pitch blockchain as something that adds value at all?
Yeah, very good point as well, right? At least from my own experience, when we started out, I'm very fluent in talking about blockchain, how great it is, what potentials and so on. But what we learn actually, it's all about the problem, right? The solutions can be anything. But going to that issue or to that point is that at least what I heard from several projects, blockchain can solve 2 problems. We talk a lot about the transparency part, which is some of them, they already know about it as well. But second is also, I talk a bit about fund, right? How can they actually get funding, but also get market? What do I mean by that? In a traditional market right now, there are like carbon investors, they go through brokers and so on with, let's say, a very complex process. Also a very, it's the big players can usually do it, but not like the smaller one or the newer ones. But with blockchains, with other players in the industry right now, like Solid World and so on, that they are providing a new ways to fund projects. But not just that, with some blockchain standards or marketplaces, they can actually sell the credits to a newer market. They don't even need to go to the registry, right? So going back to the registry questions. So if they see that there's potentials, money in the end, of course, if they get capital and they can sell, they'll be, of course, willing to try this. So it's really about the incentive at the end.
Yeah. And Nick, I want to have your perspective on this. So doesn't blockchain, if blockchain only adds complexity to it, why are you building a company in this industry right now?
Well, I don't think blockchain only adds complexity. I think that so in some ways it makes I see the traditional registries as playing 2 different roles, right? One is in setting standards, and the other is in keeping track of all the credits and who they belong to and all that sort of thing. And blockchain basically doesn't replace by itself that first role. Like, we still need standards, as we were talking about a moment ago. But that second role of keeping track of credits and making sure that, there is only one of them and so on, that's, the core essence of what a decentralized ledger does, right? And I don't think the multi-chain issue is a real problem, because as long as a credit is issued on a single chain, and that provenant, again, we're doing a bit of work at ECOTA on trying to come up with refined terminologies, right? And there are 2 different kinds of tokenized carbon credits. One is a bridged token that represents an entry in some off-chain registry. The other is a native token that is issued on-chain directly. In the first case, as long as that token represents a single credit off-chain and it's not on multiple chains, then it's okay. In the second case, which I think is where we all want to get to, where tokens are actually directly issued on-chain, it doesn't matter if it's on Polygon or on Celo or on Near or wherever, as long as there is a canonical token. Because frankly, what most people want to do with it is not to trade that token. Obviously, traders who want to buy, hold, resell, they can do that using blockchains. But ultimately, what people want is a proof of retirement, and the proof that that token was unique and retired and irreversibly so, and not double counted. And all of that you can do regardless of which blockchain you're on. So I don't see that complexity as being real. I don't think it's what's putting people off using blockchains. I think what's putting people off using blockchains is actually the UI itself, right? The fact that we need to have a wallet and buy some USDC somewhere and swap it on Uniswap, and all of that stuff is stuff that I think we should expect sustainability teams to be getting their heads around anytime soon.
Okay, so it's more about the customer experience than our customer journey, right? Making it more accessible to what we already have. Nick, I wanted to play devil's advocate for your point, because I've also talked to registries as an ECOTA representative, and one of them told me that they are skeptical of tokenization because one credit from a registry, for example, can be tokenized or bridged into the world of, I don't want to name chains here, but chain A, chain B, and chain C. And the registry of chain obviously doesn't know that any of these tokens or any of these, not tokens, but certificates is bridged into a token. Now, if these three tokens on these three different independent chains can live their life on these chains and never talk to the registry or never talk between each other. And for the registry, this is a real threat of their integrity. So what would you answer to this?
Yeah, I mean, I think that, as I said, I much prefer the world where credits are issued directly on blockchains because that gets around some of those issues. And I think the registries themselves could do more to also be the bridging partners. And so there you're basically concerned about the integrity of the bridge. And it is the role of the bridge where the off-chain tokens are held in the bridge account to ensure that those off-chain credits are only issued on one chain. And if the registries work with the bridges or perhaps create their own bridges or what have you, then that system works. If they don't and they just say, well, the blockchain world is something that we are worried about and we won't engage with, then I think you will see bad actors, and that is a real problem.
Registries, please take note. Come into our industry. Let's take some questions from the audience. Michael, I think this one is for you. So Alexander asks, would be great to hear your view on whether there is a sense now in creating a carbon credits market in the Middle East. Has there been any movement already? And I want to enhance this question because you talked about greenwashing regulation in the EU. I would love to hear your take if you have a take on the Middle East, and also about the opportunities we have in the EU afterwards.
Well, honestly, I must say when it comes to the Middle East, I don't have much to add. On the other hand, I have the feeling, when it comes to regulation, many times what happens is that, there are regulation coming up in the EU, there are regulation coming up in the US, and, one way or another, there's a big incentive also for jurisdiction to comply with them. So I would say that sooner or later, something very similar will come up. And yeah, that's it.
Any other panelists have an opinion on Middle East? Otherwise, I have one myself, but I'm going to give you the floor first. Yep, Noah, go ahead.
Yeah, just maybe share a bit as well. So at least from what I read, I've also been talking to several projects in the Middle East that there are a lot of investments coming as well in terms of decarbonizations. We all know, right, they rely on fossil fuels industries and so on, but they can't rely on it for too long. So there are many projects either in renewable energy, for example, but also in nature-based. Like one interesting project I just talked recently in UAE, close to Dubai, they're planting, I think 3 or 4 million of mangroves with very, very high tech with drones dropping seed and they are taking things to the next level as well. So I do think there is a huge potential over there because they are really relying on industry that is now, let's say, fading away and need to change.
Nora, do you feel like the renewable energy, because I know there's been a lot of controversy around renewable energy credits, and many, I guess, Western registries have taken them off their books, right? Because renewable energy doesn't need capital investment to be economically viable anymore. So the fact that Middle Eastern registries, as I understand it, are opening the door to these credits that otherwise wouldn't get sold, I feel like that's more of a problem than an opportunity.
It's a good point, Nick. I mean, I'm not saying that that's probably let's say, the way forward, right? But at least what we can see that there are incentives as well for them to actually do something. If we compare, economic parity probably before with just fossil fuels, renewable energies, and maybe additional incentive on top. As you said, I totally agree that the renewable credit that we've seen in several countries, not going to put the names there, it's not the best idea, but at least we see that there are potentials. Also, not just that, but also carbon removal, right? Some of these countries in the Middle East are also investing a lot in direct air captures and other technologies as well. Could be a good discussions based on region, maybe in the next panel.
Yeah, it's also for me an impulse to think about a region-based discussion, because from my perspective, there is a lot of demand from Middle East to just get into the market and get started and fund projects. My understanding is that the Middle East is has a bit more appetite for risk in this, so they are more willing to give money or to fund projects. That is my just subjective feeling after talking to some projects in UAE, for example. So I think there is a great demand for it, and I mean they have the regulation already set up. We in Europe, we have it upcoming, so we also have a good regional or robust regulation coming up. But the UAE, for example, already has it. So there is a lot of room to grow for the market in the Middle East. And my feeling from my conversation is that the people are in the Middle East are very hungry to get into the market and to develop it further. So it's at least my subjective take on it. Now I've got another question via WhatsApp, and this one is, since some companies are already getting sued for invalid carbon credits, I think this is one for the Delta Airlines one, probably, who are the actual buyers right now in the market? Maybe Nick, do you have a perspective or a take on this?
I don't have a particularly strong perspective on it. If there are any buyers out there, I'd love to hear from them. No, I think it's there isn't actually a single market. There are multiple carbon markets, and the buyers of kind of the cheaper RED Plus type credits that have seen a lot of fire over the last year are definitely holding back. But then there are other buyers like the Microsofts and the Metas and the Stripes of the world who are investing in very high quality frontier technology aimed at carbon removal, and those deals are going ahead and they're gaining pace. So I think there is a flight to quality, but it's kind of, there are some companies who can afford that, and whose carbon budgets have been set at levels where that's okay. And then there are others who were hoping to sort of offset all of their residual emissions at a price of $5 a ton, and they're now kind of wondering what to do. So I think to talk about there just being one market or one type of buyer is not correct.
Yeah, by the way, let me give you an ECOTA take on this. So offsetting should be the last resort. Emissions is always avoid, then reduce, and then offset. So to set the record straight here, we're not about offsetting anything just because we have the money and we can afford the offsets at a very cheap price, which are maybe invalid, but I mean, we can buy them right now at a cheap price. So anyways, I
mean, on that point, Max, I think the fact that a lot of the cheap credits have been shown to be, well, basically that it's been shown to be more risky to buy those cheap credits than not to buy them. I think that's a very good thing, because as you say, like the fact that you can just offset at $5 a ton means that there is no incentive to decarbonize. And I think companies ought to be looking at more expensive offsets, partly for the reason that it imposes some discipline on themselves.
Before we go to the next question from the audience, any other panel participants wants to chime in on who are the actual buyers in the market? I'm also interested in it, so that could be a question from me. Okay, so much bias in the market. Okay, this is also, I mean, no answer is also an answer. Anyway, then let's go to the next one. Marta asks, I'd be curious to hear your view on the idea that the history of the land that tokenized projects are created on should be included in the DMRV/standard frameworks. DMRV question. Noah, do you have an opinion on this?
Yeah, I mean, maybe talking about history is that, first there is, let's say, based on the requirements, right? Because if we actually would like to certify, we also need to explain a bit, not just explain a bit, but actually you have to do an analysis as well, the history of that, and also do baselining and so on and so forth. But I think what is not very clear previously is that all this data are very fragmented. You can submit that, getting registered, and then it's done. But I think what now a lot of companies doing DMRV is then we can actually look into various data points, either from geospatials, looking before the required maybe 20 years. You can look into it before that, but also then see different parts, right? Like deforestation rate, for example. For example, there's a lot of critics, right? If these projects are already endangered anyway, this is actually very important then to do this project, right? Because we have to kind of invest in it. But to answer that in a very short point, yes, the historical part is important. But now, how can we actually prove them, and how can we actually, make sure that it's actually the right way to do it?
Mikhail, do you want to add anything to this?
But yeah, generally, I would say, yeah, there is a value in in creating more data points, and I see personally a lot of discussion. Well, I don't want to introduce another point, but really AI is taking up. So once you have a digital twin or something, or once you have a token on the blockchain, now there are many more opportunities which are being created just for the development of the AI technologies. So when we talk about blockchain, we know that when you implement the blockchain, you can implement also some smart contracts where you define what you want the assets to do depending on certain condition, if then. Whereas now, I guess many people are starting to ask themselves, okay, if we have a digital twin or a token, what does the AI is going to do with such token? And maybe you can give a goal, you can give an objective, to an AI model. And, basically, differently from the blockchain, the AI will choose the strategy how to reach that. And I mean, that may sound a bit visionary now, but I think it's going to, something like this, it's going to happen sooner than we would expect.
Yeah, maybe the AI can also have an impact on analyzing the history of a land, for example, where a project is based on. Would love to get more into the AI AI blockchain topic. We have so many questions from the audience, so sorry that I'm skipping ahead in this one. Let's take the next one here. This is I think this is a basic question from Andre. They are asking, not clear about what is being tokenized. CO2 molecules that the issuer promised to the investor it will not emit, oil or gas molecules it promised it will not burn or extract for a specific period of time. I think this is a question about carbon negativity and maybe avoidance. Certificates, CO2 certificates. I don't know. Nick, do you want to take this?
Yeah, I can start, certainly. I mean, there are, broadly speaking, two different types of carbon credits. There's carbon avoidance credits and carbon removal credits, right? So one type of activities is doing something, whether that is investing in capital goods or in new processes, new economic incentives that prevent carbon emissions that would otherwise have happened. And that requires you to construct a model of a counterfactual future, understand what would have happened and what did happen thanks to the intervention that the carbon credit is funding. And then you can sell credits based on the differential amount of carbon in the atmosphere in those two scenarios. The other is a carbon removal credit where there is carbon in the air already and you are drawing it down via one of a number of methods. That could be planting forests, which draw down the carbon and store it as biomass. It could be more engineered removals, which draw the carbon down and store it as oil or in mineral form and so on. So there's a whole range of methodologies out there that constitute a net reduction in the amount of atmospheric carbon dioxide or other greenhouse gases. And that's what's being traded. So then each of those will go through a registration or a verification process, which I'm sure Nura can talk more about, and it will turn into a certificate of this is, 1 ton less of carbon in the atmosphere, and that gets traded, and then a company can make a claim on the back of it that once they retire that certificate, prevent it from being traded further, they have been the funders of that carbon reducing activity. So that's what's being traded, and the tokens are just another form of the underlying credit.
Yeah, and Andre, Nick said it perfectly. I just wanted to add that the market right now is heavily structured around avoidance credits. They are usually cheaper in price and also easier to emit than removal projects. And removal projects, high quality removal projects, who actually have a negative impact on the CO2 in the atmosphere, are very high in demand and can be spike in price unbelievably, especially if there's no liquidity for these projects. So yeah, this is another perspective on it. Let's get to the next question. Noura, someone from the audience, Stefan, is very interested in your company. They are asking, can somebody share what protocol, for example, Pleno is using, and what information is worthwhile to be put on the token on chain? Yeah, go ahead and take this one.
Yeah. Thanks for the questions. Maybe I'll start a bit of like what Pleno is doing. So we are, as Max mentions, a digital MRV solution. So MRV measuring, reporting, and verifications. But not just that, our goal is to also help to automate, to streamline the process for the carbon projects, right? How can we help them from the start, feasibilities, measuring until they got verified, right? So talking about the blockchain part, actually, we haven't really built on the protocol yet. So we're just starting. We're still now developing the MRV part. But the goal is that we will, I mean, this is the goal, that we could potentially be in multi-chain as well, or can call it agnostic. Why? Because we don't want to tap into the marketplace. So for example, now what we're looking into, we're going to add the audit logs. So for example, where is this project located? Very basic, right? Who's doing the audit? Who's inputting the data and so on? We cannot input everything because we also want to make it efficient, but we will add, or we will put it in a blockchain, the most important part, to make sure that we know how the data flow. Maybe just a bit of background. Nick, I think, mentions before about native on-chain credits. So basically, this is the goal, right? From the start, we have the data. It's not that bridging, which is already happening, that players, basically, they just tokenize whatever the registries already have, like all the document in the PDF and so on. They will then just like take some data, not everything, and put it on chain. So we are like in the middle part, we're trying to improve and make this more transparent from the start.
Mm-hmm. Nick, you have anything to add from your side? Not on the Pleno business model, but on yours, obviously.
So I mean, we're building a slightly different approach. I mean, we're basically taking well, we have two different products. One is taking credits that have been created on chain from our partners at Chorus, who use digital MRV and create direct on-chain tokens, and we give people the capability to retire them. A new product which we're launching in a couple of weeks will do something similar, but with actual compliance credits sitting underneath it. So this is a side of the carbon markets that we haven't discussed much in this webinar, but essentially there are voluntary credits, which is what we spent all our time talking about, and then there are compliance credits, which is kind of where the European Union, for example, will require a polluter to buy one of a limited number of allowances to be allowed to pollute, essentially. And that's how the European Union sets their cap on the number of credits issued. And we've got a product coming out in a couple of weeks, which will bridge sort of the compliance and voluntary markets. So happy to talk more about that in a couple of weeks.
And happy to take another question from the audience exactly about the allowance market. Alexander asked, what's your view as to why the price of an EU allowance fallen over the recent month in a situation of apparent demand from industry eclipsing the supply of the allowances? Do you have any take on this, Nick?
I do not. I'm not a price speculator in that sense. So no, I think it's a huge market, and there are any number of factors that could affect the carbon price. I don't want to sort of speculate as to what's going on there. Yeah.
So no price targets for the EU loans market. I'm sorry.
Not the game I'm in. Sorry.
Anyway, so I know we are on time, but I've talked to our panelists before, and we can take some more time here. Let's take 2 last questions from the audience. This one is from Tamer. I'm just going to put it out there, and anyone who wants to chime in, take it away. Does it really matter if a credit is 10, 5, or 1 year old?
I'm happy to start as well.
Good.
Maybe Nick and Michelle can chime in. And I think it really depends, right? So it's called like the vintage. Like I think most of us here in the industry knows that the vintage, when does it starting? But what we see as well, like a lot of those credits that starting a long time ago, maybe like vintage years starting 5, 10 years, are also still there, right? It's like already sitting there. The questions is that what do we do with that? Like there are still companies buying it as well. But if we think in a logical sense as well, right? Like things already happened after that. I guess they did already remove some carbons at that time or avoid the carbons. But now what we see is that then price mechanism comes in. Maybe the prices are getting lower. The newer one is more expensive. Does it mean better or worse? I think it's really hard to say depending on the projects. But for me personally, I believe it's like about investing in it. You know, if it already happened or not, we are, you know, we're fighting a long-term game here, right? So we should be able to invest as much as we can, but of course, invest in the right way. At least that's my own take.
I have a slightly different take on it, because I think, you know, we talked about how the point of a credit is to incentivize carbon reducing activity, right? And so if you're paying someone for something that happened 10 years ago that, you know, they've largely written off, I guess, internally, and that no one has been paying for, that action already happened, and you paying for it is not going to actually create more incentive to do more of that thing. So I think actually buying more recent credits increases the incentive for people to do more projects that create more recent credits. So I think actually we should be biased towards more recent vintages, because that means that people will have an incentive to create newer projects and continue to draw down more carbon. Yeah.
Mikhail, do you have a perspective?
Yeah, I agree. I like more the idea of new projects. On the other hand, for me, you know, technically CO2 emission should be considered like a fungible one. And I deem to be still a big problem, you know, the big variability in prices in CO2 offset, you know. And yeah, at the end of the day, it's somehow normal that they may lead to some opportunistic behavior, because, you know, you want to compensate for your carbon footprint and you buy all the projects and you pay cheaper. So yeah, I really don't think, you know, we are really focusing on the objective here, but more, you know, on the idea of saying, okay, I've compensated my carbon emissions.
Mm-hmm. And Lucas from the audience, you're probably wondering why I haven't stated your question yet. It's because I wanted to close out the panel with this one. So let's take this as a last one. They said, Mikhail mentioned the broader use cases of refi. Besides carbon, what do you think will scale the most? So probably this is about, for example, biodiversity and all the other use cases. I don't know. Maybe Mikhail, just take this. I don't want to prime you into any solution.
That's a good question. But personally, I have the feeling many times when we are talking about sustainability, we are somehow forgetting about, you know, the S, the social one. So I like the idea, you know, that there is the opportunity to refi, to leverage refi to create, you know, sustainable positive impact. Because at the end of the day, even when it comes, you know, to polluting behaviors, many times there is also determined because of social problems. So yeah, maybe I'm being too generic, but yeah, I feel like we are forgetting a bit too much this, and, you know, also helping people, incentivizing people to take the corrective behavior. So that's a cultural change, but which finally can have also an environmental impact, because as you mentioned correctly before, at the end of the day, that would be question of reducing our emissions, not really, emitting and then compensating.
And Lucas, let me take your question and maybe adjust it to end this one, because I'm interested. I mean, I'm obviously biased. I'm executive director of an association talking about tokenization all of the time. But we started this one out with, hey, we talked 1 year ago, we talked about what can we do in the voluntary carbon market? How can blockchain technology help scale this market? And I want to close this out with, if we look 1 year into the future from right now, so what do we need in an ideal market, in an ideal world? What would we need for tokenization to really take off and to really add some value to the challenges that we have in the VCM out there? And this is just a broad perspective on it. Just give me your gut feeling, and let's do one last round here. Let's start with you, Nick.
I think that I'm pretty excited actually about projects like Neura's, but also about projects like Open Forest Protocol, where we're seeing more direct issuance of tokens on chain and really posing an alternative to the traditional way of doing things. So I think that is really important, combined with clearer standards from bodies that are not registries. And I think that the combination of those two developments means that we will have a much higher quality choice for people who want to fund climate action.
Nick, do you, sorry, I'm always, there are so many names with N today, only 2. Noura, do you want to add anything?
Yeah, I mean, I don't do forecasting as well, but I like to do this work backwards. I think it's a concept from Jeff Bezos from Amazon. In this case, like all companies or most companies have 2030 targets, right? And also countries have, Paris Agreement 2050, some have 2040 and so on. So if we work backwards from there, the year coming up next year, 2 years, 3 years, we're getting closer to the target, meaning that at the end of the day, company and countries have to do something. So then this is actually the time for us right now, when the markets are still, still a bit slow, that we can actually prove, to experiment. We will make mistakes along the way. But then when the market is up, this is actually the time where we would prove it. So next year, I'm very positive. If not, I will not jump in full time on this project. So yeah, I'm really bullish on that.
Nice bullish outlook. Michael, take it away. You have the last word.
Yeah, I would say user experience. It was mentioned before, but that's still a big limit.
Okay. So guys, thank you very much. We're already over time. So unfortunately, I have to cut it here. I know that we couldn't take all of the questions from the audience. Thank you for being so active. Always happy to have such an active audience, and it's way more engaging like this. So thank you for the questions, and sorry for the questions we couldn't come to in this panel, maybe in the next one. So this has been a great discussion. Nick, Michael, Noura, thank you very much for joining. And thanks for being with us today and making this such an interesting conversation. I really much enjoyed it. Also, thanks to everyone in the audience. I hope you enjoyed this event. You can follow ECOTA on LinkedIn and Twitter, or I should say X now, right? So you can follow ECOTA on LinkedIn and X so that you don't miss any of our upcoming events like panels like these. If you are an individual, you can join ECOTA as an expert or as a fellow. And if you're an organization, you can join us as an institutional member. And then we will work together to decarbonize our future with blockchain technology. To become a member, just look up ecota.io. There's a little button top right, join us. I'm happy to have you either as an individual or as a company. But for now, thank you very much. Thank you to you in the audience. Thank you to our panelists, and talk to you soon. Bye-bye.
Thanks a lot, Max. Bye.